Hello and welcome back to another episode of Fintech Focus TV with me, Toby. You have seen him a couple of times before on this show. That said, it is always an absolute pleasure to bring him back into it. It is Hirander Misra from GMEX. Hirander, how are you?
Hi, very well, Toby. How are you?
Very good indeed. Thanks, very good indeed. Listen, lovely to have you back on the show. It seems that we've spoken 3 times over the last year and we've sort of gone through this together through the journey. It sounds like things continue to go incredibly well for it. We'll explore that a little bit further as you're talking. But there will be people, believe it or not, who might not have seen the first 2 episodes. So let's give a quick recap on yourself, the business, and what GMEX do.
Sure. So my background's 25 years in electronic trading and exchanges, formerly CEO and co-founder of GMEX Europe, which we then syndicated to the banks and trading firms, and then BATS bought it, which is part of CBOE Markets. After that, set up GMEX Group. Time flies, as you know, with your business when you're having fun. So that was like 9 years ago. And then, our focus has very much been on market infrastructure, trading, exchanges, clearing, settlement, market surveillance, and providing platforms, software as a service to exchanges, new venues, whether they're digital asset or traditional venues, and post-trade providers all over the world. More recently, we've also got our own exchange license in the Seychelles as well, to operate a security token ecosystem that also has traditional securities, so it's hybrid as well. And then we also have a venture build arm where we take minority stakes in some market infrastructure investments as well. I
love it. It's the thing I've always loved about looking at you in the group has been this sort of ability to sort of spot opportunities and go into it. And I always sort of marvel at the ability to sort of comedian-like gain that sort of credibility in the space that you've got. It's a really interesting business to look at and an interesting journey you've been on. And we launched the next issue of the Financial Technologist, which you've written in again, which comes out on the 28th of this month. So it may come out, but slightly before or after it. We'll have to wait and see. But your article is brilliant in that and focused around innovation, which I think is probably the sort of kernel of you over the last 9 years, really. Even going back before that to, as you say, about co-founding GMEX and such like. Tell me a little bit about. This is a massively open question, but tell me about your thoughts on innovation and how it's been so important to the growth of the business.
Yeah, essential because, as you know, financial technology moves very fast. I mean, again, you could argue it's moving faster now than it's ever done before. But when we started out, you're trying to build a business, as as you've done, and getting that first client is kind of always important. But you're dealing with like a 2-year sales cycle on software and technology infrastructure. And, it's that age-old syndrome. No one's ever fired for, buying IBM or, whatever big platform might be out there. So, how do you get around that chicken and egg? What's been your previous reference point? Where are you running? How long have you been up? So, we had to address all those issues. But at the same time, initially we started off as an exchange facilitation business on the technology side, but then you realize actually infrastructure goes end to end. So how do we adapt? And every time we've had to think about, what's already out there and how can we do things differently, but without reinventing the wheel. So, because again, sometimes, I laugh because when someone says, okay, this problem is solved by this new technology, including blockchain, but they're doing exactly the same as what they did before and it adds no value. You're simply going from paper and pen to email, right? But without adding any substantial value. So, we're always looking at this from a wider value add and also strategically what the bigger opportunity is. And that's why, partnerships have been important for us. Of course, you've got to monetize revenues and customers, but a number of those partnerships have also then led to, more accelerated growth and revenue, but also brought in other thoughts for kind of IP development. So I think, bane of every entrepreneur. I mean, it's always about kind of surviving and then building traction and reputation, then scaling. But we've never been complacent. And I think if you are, the market just passes you by, and ultimately it becomes the innovator's dilemma, right? With Christensen and that book. So I think continually adapting is important. We've spoken on a previous call about pivots, and really. More than pivots, it's kind of an extension of the strategy and what you're doing into opportunities that may not have existed kind of when you first started
Yeah, I think I absolutely agree with that. I think that there's an interesting thing about entrepreneurialism and pivoting, and whether they, whether as we spoke before about the sort of dirty word of pivot, that sort of ability to see opportunity and create that. And I think the partnership thing you're talking about there is also really interesting, because you've kind of been ahead of your time a little bit on all of that, where it's become very de rigueur at the moment for people to see those opportunities. It's for me, it's always made sense. And I think if you look at the industry, I've said this a number of times on the show, the industry has traditionally been very reluctant to see, right, where are those opportunities to partner? Where are those opportunities to potentially see a bigger thing rather than an immediate win? You've mentioned the innovator's dilemma there, and the book, and there's so many different things that you can see within blitzscaling, another classic on the subject of everything. I'm very, very interested to see where your I guess your sort of motivation or inspiration comes from for where you've taken your sort of your route to market, and I know traditionally it's all been done, self-funded, etc. You've been on a journey before with Chi-X and such like, but tell me a little bit about your whole thought process and how this all come together and where your inspiration does come for that.
Yeah, a lot of the time, and it's interesting, because when you hear about the likes of Elon Musk and others out there, they read a lot, and the thing is, what you know, but there's always an opportunity to learn a lot more and learn from other people. So actually, I used to read a lot of kind of fictional books when I was younger, but now, less time for that. But actually, really kind of taking into account what's happening elsewhere in the industry, and then trying to apply that. So sort of thinking, well, what about 1 year's time, 2 years time, 5 years time? What's that going to translate into going forward? So, for example, taking the kind of digital assets blockchain industry, everyone was getting really excited a few years ago about exchanges, about the custodial side of things, those nodes. But no one was really thinking about, well, how do we join this all together and act as a glue? Because unintended consequences, more fragmentation now than there's ever been before, because you've got traditional infrastructure, now multiple types of blockchain infrastructure. So even at that point, we were thinking, well, actually, there needs to be the glue to tie this together, because the focus is going to shift away from those nodes. I mean, it'll continue with those nodes, but it's going to shift towards, well, how do we interconnect all of this? And so it's looking at that and then applying that to kind of scenarios where you can learn from other industries and what's happened elsewhere as well. And of course, nothing's for certain, because otherwise, we'd be sat here and we could probably predict the lottery numbers next, right? But at the same time,
you won't be too far off it now, surely.
Yeah, that's right.
Surely built something to guess that.
I'll ring Mystic Meg and see if she can help. Still around, but I think again, with any entrepreneurial business, I mean, you'll know this yourself. You've got to make a call based on, it's a combination of being somewhat scientific and informed, but actually a lot of it is also gut feel and using the two together, and instinct, and then make a call where actually you're trying to predict something, because with software as well, it takes time to develop technology. And if you make the wrong call, you've kind of lost 6 months, a year and a half, and you're down the wrong track. You've got to try and make a call and go, okay, it might branch off from here and here, but it's going to go here. And to some extent, try and see how that diversifies as well, because of course you might devote all your resources there, but you don't want to put all your chips on one number on a single table as well. So I think, continually try to stay abreast, but now, I mean, the amount of news out there, it's almost information overload. So sometimes
it's incredible, isn't it? And it keeps coming through in from various different sources. I blame social media for it, but it's a great opportunity at the same time, isn't it? To see, whilst an information overload, there's so many different snippets that allow you to sort of change direction and see opportunities and learn, like you talked about before. I think there's I'm sitting here with 2 piles of books higher than my head, either side of this desk, all with various things that you can try and take little golden threads out of and sew into your story and your journey. But if you look at it on social media as another piece, with everything you get through on a daily basis from LinkedIn and Twitter and everything in between, there are so many opportunities out there that you can just do that actually there's a responsibility to keep that sort of, I guess, that sort of niche and specialism about what you are, which I think is quite interesting about you, because you've been able to do that, but at the same sort of stage adapt and bring in new arms and move to the market and move to the news at the same time, right?
Yeah, and that's the key, because how do you how do you remain agile? And also as you start to grow, it's a lot easier. You start off 4 of you in a room, right? And you're starting a new business, and then actually communication's fairly seamless as you grow. And now we've got people in 8 different jurisdictions now, and there's probably going to be more. And you think, different time zones. How do you maintain that cohesiveness and that cultural identity as a it was somewhat easier with
that helps.
The culture map. There you go. There you go. Right, your diverse teams, diverse backgrounds, and it's finding what works. It's a bit like at the moment we're looking at an acquisition in a certain area. The teams in various places, but the conversation came up. Do we have to relocate to London? And I said no. Actually, what's your preference? Because all of a sudden, part of our team is office based, part of it's remote, and actually, what do you guys want to do? What are your thoughts? And all of a sudden, as we discussed that, an opportunity came about where to develop something else collectively. If this goes ahead, actually, we could look at a new jurisdiction because there's support there and there's talent. Just by not being rigid and saying, well, you will come to London and you will embrace what we're doing. And I think post-pandemic, that level of flexibility is out there more so than ever before. But the key challenge is then ensuring that it's cohesive as we move ahead.
Yeah, I've just recorded a podcast this morning for our Sunday show, which just looks at some of the things we're talking about, and that adaptability and change and the opportunities that have been created by this for companies to look. We started off in Belfast 6 weeks ago, which has got off to a roaring start, where it's a team that works in the same markets as over here, but it's just opened up a new talent pool to us of excellent people that I just don't think we'd have been in a position to have looked at through the strict refinement of how we've done things before to be able to do that. And I think that's the opportunity that people are seeing left, right, and centre in this marketplace. There's some really, really interesting stuff going on there. Your business and how it's sort of moved into that. You look at LMAX, their news today as well, which came through about what's happening with their investment to attack the same marketplace, which I imagine's got some thought process into what's happening in your world as well. So yeah, it's very, very interesting. You mentioned also earlier on about your sort of journey. You mentioned the sort of startup and 4 in a room to 9 years on where you are now in this sort of this great journey that you guys have been on, doing some really interesting stuff. I know there's some also interesting things that you're looking at now to sort of take the next sort of steps on with it all. Give us an oversight of what's happened and where you're heading.
Yeah, it's interesting. I mean, recently, actually in the news, there's an announcement of a collaboration in terms of launching a new digital venue, which TP ICAP announced, and they partnered on the custody side with Fidelity Digital Assets and Zodia, the venture by Standard Chartered. And that one's interesting because, we've technologically enabled TP ICAP plus the post-trade platform hub into multiple custodians as well. And really, as I mentioned, when you're talking about software as a service, they're solid businesses, and then obviously you can scale them, but it's kind of an upward curve like that rather than exponential. Kind of more linear. Now, when you're talking about kind of platform plays like this, kind of ecosystem as a service plays, that can be much more exponential growth. And then a network effect. So, we really see, I mentioned earlier, there's a lot of fragmentation now, where firms on the traditional side in capital markets saying, how do we get into digital assets, but not reinvent the wheel to our clients and customers and our internal desks as far as traditional is concerned, because, we spent a huge amount on that infrastructure. You've got the neo players connected into a combination of decentralized and centralized digital asset infrastructure. But there's multiple silos with that. Nothing talks to each other. It's all kind of fragmented. To trade across these markets or to move collateral or utilize collateral is a big, big pain. So, we see the opportunity with some of these ecosystem plays to really come out there and start to kind of knit together what these fragmented markets have led to, which is kind of an inhibited level of trading where, of course, digital assets have been growing, but you can't put up traditional forms of collateral other than cash on the digital side. You can't put up crypto or Bitcoin on the traditional side, and all of these things have got to coexist because an asset class is an asset class. So, the work that we're doing is around how do we act as that glue? How do we drive that more as a service? And then, again, recently had an article just yesterday, a number of people like State Street, BNY and others are quoted in Deutsche Börse, and it talks about, what's next for infrastructure. And effectively, it's not going to be traditional infrastructure. It's not going to be just digital infrastructure. You're effectively talking hybrid market infrastructure is where we're headed, because for the next 10 years, Swift isn't going away anywhere. Even they're adapting into digital. The old world and the new world will coexist. So I think on that premise, that's a premise that we're working on, and everything we're doing kind of works on that basis, really.
Yeah, it's very, very interesting to sort of see that and make those sort of connections, and then sort of support where the market's moving. I was having exactly the same conversation earlier on with it, and with that, as we talk about this period of the last year and going back through our conversations over the course of the last 12 months, it's sort of the sort of forming phase where we sort of saw what the market was doing and where the world was going to fit to. There's opportunities in this and pivots and such like, and working out where we can innovate to create value, to now looking at the next phase of growth and saying, right, how do we, is this the right time to really back it and explode? I know you've been having some interesting conversations about that in the sort of next phase of the GMEX story. And that includes conversations that you've just very hot off the press come from to start talking to and exploring investors, etc. Tell me a little bit about your thoughts on that and why that's sort of coming into the conversation now, and what you're looking for within that at the same time.
Yeah, really good question, because earlier on we spoke about partnerships, and everyone talks about kind of cooperation, competition, collaboration. But in reality, what does it really mean? Whenever I read yet another MAU, you think, what's the call to action around all of this? And as in our business, much like yours, even though they're different businesses, ultimately you're only as good as the runs you put on the board. I see a lot of these sort of recent investment rounds where firms gone from Series A to Series A plus or Series B in the space of 3 months, and the valuation has changed markedly. And you think, well, the fundamentals couldn't have changed that quickly, to the level of that. So you think, ultimately you've got to put revenue and profitability on the board, otherwise the whole thing comes crashing down. It's interesting in the UK in that it's a much more of a kind of EBITDA, kind of P&L based approach. The US is very open to forward valuation. With tech, there's got to be a level of expectation of forward value, because it takes time for these network effects and the platforms to scale. For us, as you rightly said, over 9 years we've been self-funded. We haven't gone through the usual Series A, Series B type rounds. We seed funded it ourselves when we did a management buyout out of what was then Plus Markets, that small stock exchange, now part of the Aquis exchange. And obviously we've kind of built out what we've done out of revenues. But then there comes a point when you think, well, actually, there's opportunity here. We can continue to do what we're doing with that linear growth curve, but there's a real opportunity, as I mentioned, to go exponential if we can extend into a couple of areas. And then time to market and being able to deliver and scale that is key. So, that's something, as I mentioned earlier, where we see the ability to kind of knit together fragmentation. And we said, well, actually, it's the right time in our life cycle to then at least look at what opportunities are out there in terms of investors and things like that, that also have a good strategic bent into what we're doing. And we're not wedded to that, because, the beauty of what we're doing is we can continue to do what we're doing and we can continue to steadily scale it. This market is interesting at the moment, and we see that we built a lot of substance with strong foundations. And we said, well, it's a good opportunity to see what's out there, just to see if we can get the right sort of partnership on the investor side. Because as you rightly said before, it's as much about us finding the right investor as it is for the investor finding the right investment in us as well.
Yeah, I think that's so critical. I mean, we're talking, as I say, about this, as you said before, that this is something I think is really important. You're going into this at a great time where there isn't a disappearing runway. You're in a great position as a business, and this is about how you can capitalize and make the most of an economic situation and a market situation that could really suit and create something particularly special. So you going out with something there where there isn't the necessity to take that investment gives you an opportunity to really make that match in the perfect way. And I see where, and we know this. We know that the sort of numbers of investments and the sort of likelihood of return is a numbers game in many respects. And I think so many times that is down to a mismatch between investor and people taking the investment. They've done it because they need to. They're out of runway. They've done it because they're forcing the issue. They've done it because it's the one who strikes first, and there's a naivety around that, or whatever it may be. But actually, I think it's so important for businesses to look at their investment partners and say, what are their objectives? What are they looking to go? How are we going to work with them on a day-to-day basis? What's the equity of what they're looking to? And I'm not talking about physical equity, but what's the equitable nature of the relationship going to look like? How involved are they going to want to be in your business, and how involved do you want them to be in your business by the same rationale? And what's the two-way street? Is it just money, or is it guidance? Is it all these different things that people are looking for? And I think it is such a minefield that get it right, and there are spectacular stories and businesses that have absolutely flown through. And I think they generally come from people who are coming at it from your sort of background, your sort of I guess entry point, to look at it from a position of strength, to be able to take that time to make the right sort of call. Whereas there's a number of different people there who've got it spectacularly wrong and undone all their good work by, I guess, hedging on an opportunity and picking the wrong partner to be able to move that further forward with. So I'm really interested to sort of push that back on you, to say, look, you've started speaking to a few people, looking at the marketplace and seeing what's out there, seeing what the appetite's like. We know you've got a great product to take to them. We can talk about that should you wish. But what I'm really interested in from you is what you look for in an investor, and what would make that, what's the right partner for you in that sort of thing, and how you work that out.
It's really a question, because where the boots on the other foot in respect of, we're looking at an acquisition at the moment as well. And I just got off a call before this, an investor call, and before that, with that acquisition, and then the team were trying to get comfortable with us. And I said, it's as much you being comfortable with us as we are with you. And if we don't align our interests, whether it's the upside, whether it's how we're going to work, whether it's how the teams are going to cross-pollinate, then we're not going to work. It's not going to work for you. It's not going to work for us. It's important to kind of put your cards on the table, or even ask some of those difficult questions you may not want to ask at the outset, and make sure you try and iron out as much as you can. Of course, things change, and nothing's ever static or certain. But at least you're going into this with your eyes open, and I think many time you get a feel for the type of investor when you're on these calls, just by the interactions that you have with them and how they're behaving with you, which give you a good insight into how they will be with you. Much like, when we used to go for a job interview, right? And sometimes you'd get absolutely grilled, or you'd be treated badly, and I'd walk out and go, well, I don't want to work for an organization like that, right? We say this to our employees as well. It's a job for you. You're interviewing us. It's not just us interviewing you.
Exactly right.
And it's that's important. And I think whether it's investors or whether it's employers, many tend to forget that, right? And it's very much doing you a favor. In some ways, we've got an added advantage because we're profitable. We're not going to run out of runway. We're looking for investment for the reason of saying, okay, new opportunities, let's scale. You're right, not everyone has that luxury, and sometimes you end up making the wrong decisions because there's a level of desperation. But certainly, we look at all the signs. People say first impressions, but that first investor call is very, very interesting. And for us, it's very, very important not to have dumb money, so to speak. It's important that the investors coming in add value. That doesn't mean they have to be strategically a bank or anyone like that, but there's got to be something that they bring to the party, and that can be something as simple as they have an existing portfolio. Many a time before we approach investors, we map what we're doing to some of their portfolio companies, and we look at what the synergies are, and we'll actually talk to them about those synergies, because even though the investor might be a PE or a VC investor, their portfolio companies are real, they're operating, and that's one way of finding the synergy. Not just kind of customer client or looking at that kind of approach as well.
Yeah, it's very, very interesting, isn't it? And I think that sort of the bit that will stand out for me there from what you just said is that whole two-way street of where it goes. I see it I remember once I had to sit in front of a group of hedge fund CTOs, and at the request of another hedge fund CTO who should remain nameless, who asked me to basically sort of stand there at a dinner and talk to them through about why they were failing their ability to bring talent into the business. And it was very much about the arrogance and the hubris of saying, you need to impress us, we're a hedge fund, you should want to work with us. And there was no sell whatsoever in terms of where they wanted to go. And I do wonder about the right investor, I guess, interview or conversations about how much there is of that two-way street of really showing that value and creating that value and showcasing what they can bring to the party for that. And I think there's a couple who do it incredibly well with exactly the right reasons for it and the experience. And I think it can really expose cracks very, very quickly in businesses there if you're there to do it. So when you've approached it and you're thinking about this sort of stuff, what sort of stakes in the ground do you put in there? If there are three things that you look to do, is that something which you think about beforehand, or is it more gut feeling?
Yeah, actually, it's interesting because these calls can go anywhere, and the data very, very, very interesting. But if you're being challenged and you don't agree with it, rather than cave into that, it doesn't matter whether they're testing you or whether it's their view. I do tend to call it. So if I've got a counter view, many a time. I've spoken to other entrepreneurs and they're almost in awe of the investor or the potential investor.
Yeah, there is that.
But then all of a sudden you're on a losing streak because I guess most investors don't want to see that as well, right? And it's the same as, again, with a lot of people we hire. We want them to think about ideas within the firm and challenge us where they think differently rather than just be yes people, right? And I'm sure many investors are like that. So number one, if I agree with them, then a lot of the time it ends up being quite an interesting dialogue because you talk about market structure, talk about the nature of the market, you then relate that back to kind of the corporate finance side and what's happening with, similar transactions and, the competitive environment as well. But other times where I disagree with them, I call it. So for example, one of the questions I got recently was, you guys are active in the Seychelles. Is there a reason that you're in tax avoidance jurisdictions? So I said, so I called that. I said, why do you think it's tax avoidance and what do you think that we're doing there? We've gone in and we've got regulated businesses set up. And actually, on the other hand, that's one thing, blacklist, grey list aside, and all these things are being continually reviewed. The other thing is we book 95% of our revenues for a UK entity, even though we don't have to, right? Because we believe in kind of paying tax where we're earning the bulk of our revenues, right? And so I called it, and again, they just made an overarching assumption. They weren't expecting me to challenge it, but I wasn't going to have it, if you see what I mean.
Yeah. And how did that go down?
It was actually quite good because, I mean, you're right. Sometimes you come across, like your hedge fund example, some level of arrogance, right? Other times, actually, they respect you more for calling it because at the same time, they know, even as an entrepreneur, I mean, you've been down this road, you have to make difficult decisions at times, and you've got to have the ability to go with your own conviction and make difficult choices, right? So in many ways, the non-arrogant ones certainly respect that, and after that, it kind of opens up a whole different dynamic in the way that you interact on the rest of the call as well. And so I'd recommend it, even though I guess it requires a level of confidence, because if you don't, I mean, and it's that type of investor, I mean, they'll continue to press, and then it ends up being a quite horrible call and you're totally grilled at the end of it. Obviously, be prepared, know your numbers, kind of if they talk about what our current P&L is, what's projected, what the breakdown of recurring and one-off is, what that translates to in terms of value, we can give them all those answers. We're well prepared, whether it's on paper or verbally. But a lot of the dynamic is it's kind of non-quantitative, it's qualitative, it's kind of gut feel, it's kind of the interaction between both of you. Yeah. In fact, maybe we should write a book on investor dynamic, investee dynamic, really.
Now there is an idea. I'm sure there's one in which I can't think it's here.
Oh, you probably got it there. Yeah.
The Secrets of Sand Hill Road is an interesting read on that subject. Which, but I think we can do it better.
Yeah, why not? Again, there's always a way to do it better.
Quite right. Hirander, tell me a little. So there's going to be people watching this who are interested in the GMEX story, and even people there who are looking to make that sort of investment into the opportunities you've spoken about beforehand. Who should be talking to you right now, and what's the best way for them to get in touch?
Anyone that's interested in kind of digital assets, market infrastructure, and that side of things, blockchain investment in capital markets, whether it's an advanced venture capital investor, whether it's a private equity investor, whether it's a strategic investor. I mean, it's interesting. There's a number of interesting investors in the data room, and it ranges from banks to crypto kind of digital asset VCs to a traditional PE to a hedge fund, not an arrogant one, really nice one actually.
They've got a lot better. I think they've got a lot better.
No, that's right. They've got a lot better. So actually, we've actually more mapped our kind of synergies with some of those rather than say, okay, we want a certain type of investor, because when you say strategic or synergistic investor, it can be a number of those buckets. And what's interesting actually is I got asked the other day by an investor, what's your ideal round? What will it consist of? Do you want one investor? Do you want 10? I said, actually it's good to have a small number of core investors. I've seen rounds recently where there's been 20, 30 investors. But I said, if you get 3 or 4 of the right investors on, but they've all got slightly different skill sets, it's a bit like, you get the banks on, sometimes their view where something's going is very different to a PE investor where it's all about return. But actually the 2 types of investors could fit quite well, because, one can drive flow and, drive business. The other one's really looking at this as a business and an opportunity and a return on that, but each can keep the other one honest. So that kind of balance is quite interesting. And, recent rounds, we've seen on some of them that type of balance. I think, where I've seen rounds with like 20, 30 investors, I think about herding cats. I got a dog recently rather than cats.
Both of them, so you've got the same problem, haven't you? So that is fascinating, that, isn't it? Because you think of, we've spoken before about the dynamics and the difficulties and the concept of that many cooks and what the broth comes out looking like is I'd love to know the data behind the success ratio of where the ideal, I mean, this will go into our book obviously, but that data of where the ideal number is for of investors and around would be very, very interesting to see which one where you've got multiple times has really helped out on it. We'll explore that.
There's a bit of research to do actually.
There you go. I'm sure you'll look into it.
We'll get our quant guy internally now to get on it. Actually,
fun. We'll put that in the link that goes alongside with this one. Hirander, it's been an absolute pleasure as always chatting to you. Any final thoughts from you?
No, it's great. I mean, it's been a pleasure talking to you. I think the great thing now is, we spoke the first call we had, and everyone was kind of rabbit in headlights of the pandemic, not knowing what would happen and how things would play out. Then next call we had things picked up and there's a lot of opportunity, and everyone realized that business had to continue and projects had to move forward. Now I think we're just seeing an acceleration of that, because everyone's got so used to working, whether it's remotely, electronically, whether it's harnessing technology. The opportunities are great, and you mentioned this before, things are coming together well, because you've got the capital market side, but now you've got B2C, B2B converging as well. Now, on fungible tokens and that side, you've got the whole social media side converging back into this side as well. And it's just fascinating, actually. There's never been as much innovation as there is now. And therein lies the opportunity.
Absolutely. And that is a beautiful way to wrap this up. I think there's the quote for the release of this as well. So watch that one to come. Love talking to you as always. Hirander, best of luck with it. I look forward to hearing the release, and let's make a bit of noise about it when it happens. Really looking forward to seeing where the investor roadshow goes.
Likewise, Toby. A pleasure as always.
Thanks for coming on the show again, and thank you all for watching. Hope you've enjoyed it as much as I have, and we will see you soon on another episode of Fintech Focus TV. Thanks a lot.